was very well explained and put, Surbhi. But let's get in Devang Mehta from Spark Private Wealth Management. He's a perfect person to talk about Outlook 2025. So, Devang, let's start with, I don't know if you had a chance to listen to what Surbhi was telling us, but the first factor, right, to watch will be the US markets, the US economy, and whether, the kind of dizzying rally that US markets have enjoyed for the last 2 years will continue. In 2 years, the S&P 500 is up nearly 50%. So what happens to the US markets from here? Because that's the base case, because their valuations are stretched. There is that Trump trade tariff risk as well. And what if the big, the fabulous seven, magnificent seven stocks don't live up to that AI hype? So there are those challenges on board. How would you approach the global markets as a top-down call?
Morning, Reema. Thanks for having me on the show, and season's greetings to all of you. In advance wishes for a happy new year to all of you, your team, and your viewers as well. Yes, I think clearly, while this is the last day of this year, reflecting on to what happened in 2024, and ideally, I think the last 3-4 months have been so eventful that it takes us to 2025, and I think the start of 2025, we all know that we need to welcome Mr. Trump, and I think the policies that probably lays down over the next 2, 3, 4 months would be I think with a lens markets and market participants across the world will sort of look into it. Now, yes, probably we know that India will not be sort of not a beneficiary of what happens. China, yes, can be a little bit more non-conducive for China than India. Clearly, I think most importantly, you rightly talked about the valuations in US, right? So US valuations, everybody knows by any stretch of imagination are stretched. Now, I think there is a choice that yes, there was a home trade which happened, money flowing out of emerging markets going back to US. That trade is playing right now, and we don't know, probably it might play for a quarter as well. But I think at some point, at valuations which are right now being attractive, we know that the earnings were not so great. There is a contraction in terms of valuation as well, price correction as well. I think at some point we are starting to look a little more attractive than US. Even a lot of emerging markets, be it China, be it India, will start looking attractive. And at that point, the flows would tend to come back. Again, I'm no way saying that it will happen sooner. But very clearly, I think US markets are stretched. Their valuations are expensive. It's a trade which can still last for the next 6-9 months as Trump comes to power, and business policies might be conducive more for US. But the trade is that probably at valuations, in hindsight, 4-5 months down the line, before right now, I think our valuations were stretched. But after this correction of 12% and stocks correcting by 15, 20, 25, 30% also, I think our markets are getting more attractive than US.
Right. Devang, very interesting point you've put out there. Well, you've also spoken about currency volatility, and Indian currency, or the rupee, has been weakening quite significantly. In that backdrop, two sectors we want your opinion on. Number one, how do you look at IT from this point on? And it's been quite weak, especially in today's session. And how do you look at pharma, which has been doing quite well as far as last 2 to 3 trading weeks are concerned?
I think interesting that currency, I just made a point that Indian currency has been relatively stronger if you compare it to the other pack, emerging market pack. And of course, it is more of a dollar strengthening than rupee weakening, which we have seen. Yes, coming back to the sectors that you asked about, we are very positive on the domestic-centric sectors. Having said that, IT, pharma seems to be coming back with a bang. IT still seems to be a trade which can generate 10-12% type of returns over the next 2-3 years. The typical large cap IT boys, we know that the constant currency growth and all are probably very, very low single digit. There might be some bit of improvement as the global arena comes back, as demand comes back, and there are more spendings on discretionary as well. So that might come back. But honestly, to tell you the truth, we are more positive on domestic-centric stories than the global linkages or the export-related stories, where we know there are so many moving parts. I was just listening to a conversation before this. There are n number of moving parts when you look at US or China or even the European nations. I'll be more comfortable talking about India's capex or India's strength in terms of discretionary consumption rather than taking global trade. So yes, we might be very gradual underweights over there. But the bulk of the investments that we do are more towards domestic-centric themes.
Indeed, you've been maintaining that for a while, and it's worked very well for all your investors. Any new ideas, Devang, from Spark Private Wealth Management that you'd like to share?
So I think going into 2025, I would probably share certain themes and certain sectors. I think the themes that you rightly said that has worked so far has been energy efficiency, power automation, which we are still bullish on. Honestly, some of the companies that we picked up in the past 3-4 years have become 10x, 12x, and all thanks to the market rally as well, of course. But from here on also, if I dissect the market cap, I think there are a lot more opportunities below 1 lakh crore of market cap, and there are emerging sectors. As we talk, I think there are so many new listings. I'm not getting carried away by the listings, but there is a plethora of opportunities available right now if somebody wants to sort of build a portfolio. And by new age businesses, I'm not meaning businesses who are sort of burning cash. But companies in the automation universe, companies in stamping and lamination, companies I mentioned on a couple of shows back about air compressors, companies like Ingersoll Rand or LG Equipment or Kirloskar Pneumatic, not recommending, but some examples of those. PT Engineering, which is into stamping and lamination. This type of companies, I think, are taking center stage. There are supply chain. TVS Supply Chain is another company which probably should be sort of looked into. I'm not again saying that we are recommending that. Port infrastructure is something which is developing very well. So there is a company like JSW Infrastructure, which also is honestly doing a lot more sort of a work in terms of setting up infrastructure lines for ports as well. And I think it's getting a lot of minor ports into its custody. So I think these are type of businesses which are high in terms of ROE, ROC. These are businesses which are sort of no-debt businesses. These are companies which are growing their profitability at more than 20-25%, EBITDA, PAT. Everything is in line, and these are companies which probably have that type of moat and a huge market share. I think these are sectors one should look into if one has a 2-3 year horizon.
So Devang, you've spoken both about new age as well as some of the old world economy stocks. Now, apart from that, one particular pocket of the market that's not done very well in the last couple of years has actually been the banking pack, especially private financials. Going into 2025, is that one particular space you look to nibble in?
I think, see, the problem with private financial has been there is too much of perfect competition as we talk now. Again, I know that it has been a crowded trade the last 2-3 years, and I probably take a bit of pride by saying that we don't own the typical large banks. And why I say that, because yes, we know that the NPA problem has got cleared out, be it private, be it PSU, and I think the banks are all ready with fuel to lend to the new age sectors and the sectors which need sort of a lot of investments, be it semiconductor, be it EMS, all this type of companies. So my sense here is that I would love to be into proxy plays where the lending happens rather than the lenders itself. By saying that, I'm no way saying that banks are under-owned right now as we talk. It has been an over-owned space. The valuations have sort of become reasonable. There can be a trade for the next 6 months, 1 year, which can happen. But as I said, somebody looking out for alpha sectors or companies where the themes would emerge. The next 3-5 years, headlines would have companies or sectors which probably I talked about. So that will be more comfortable over there rather than putting it into a very, very simple sort of banking play.
Devang, thank you for joining in. Wish you a very happy new year and look forward to chatting with you more often in 2025. Enjoy your night. Get into a break. On the other side, the management of Zen Technologies will join in to talk about their outlook for 2025.